righty.
All right, what's
Here we
up?
are. Second episode.
Episode number 2.
Yep.
What are we at? We're at like 10 subscribers right now.
10 YouTube subscribers. I'm not sure. Let's see. 7 Twitter followers. Man, I know.
That is
We're launching quick here.
Infinite percent increase
Yeah,
since
right.
last week. That's
a good way to put it. I like that. Percentage increases. Yeah, it's great.
Yeah.
We're on every platform now. I just got an email that we're on Google platform for podcasts. The only one we're missing is Apple. Got a 5-star review. It may or may not be from me. You got a 5-star review on Spotify. I know someone really loves.
We gotta get our moms on this podcast and their extended family, and just be like, "Yo, we need you guys to be our full base of support right now."
Our whole audience.
I have not subscribed yet, so we're a little low on our numbers right now.
All right. Well, just give us a 5-star rating, Dan, if you like it. If you think it's shit, just let us know too.
I'll be honest. I'll give a candid review.
We got to create some AI bots that could just be our audience and just pump the podcast numbers.
So we start with the old market analysis.
Yeah, why not? I could go into share my screen, and I have a lot of tabs open.
I have 4,000 tabs.
It's just a struggle. Okay, here we go.
I really need to, get on that.
Yeah, so taking a look at Bitcoin. So we're having a red week so far. And I mean, we've had 8 straight green weeks. I mean, this hasn't happened in a long time. I think the last time I saw was June 2017 was the last time we had this many green weeks in a row. So, I mean, I see this as a technical correction. Nothing major here. Just people profit taking. I mean, it was bound to happen eventually. The question is, how long is this going to last and how deep is it going to go? I don't think it's going to go that deep. I think we'll get some small correction this week, and the next week probably going to just keep going up, honestly. But yeah, so here, April 2017, 1, 2, 3, 4, 5, 6, 7, 8, and then big candle down. Wow, that was actually a pretty deep one. 3,000 to 2,000, 30% correction. Wow. Yeah, 2017 was a wild year. But yeah, I mean,
what phase would you say it feels like we're in right now?
Yeah.
As far as I don't know, was the Wyckoff traction?
Yeah. I mean, this kind of move usually I don't see until, this kind of implies we're in a later stage of a bull, honestly, when you get this many green weeks in a row. Maybe this time is different. I tend to not think that. It's tough to say. I mean, this kind of I've been thinking about this a little bit. I feel like we're kind of in this mini bull run right now. And then I do think we're going to get an extended consolidation, that's going to last a few months where people are not sure anymore about where the market's headed. I don't think it's going to come yet. I think it could actually come after the Bitcoin ETF gets approved. I could see a scenario where the ETF gets approved, we go up a little more because people get excited, and then there's kind of just this lull for a while until the halving happens, and maybe even a couple months after that, the first half of next year. And then, we go back up again in the middle of next year.
It's really hard to say. I don't know. I'm kind of more in tune with sort of just the macro conditions. And I feel like we're even getting a mixed bag there.
Yeah.
There's a lot of just mixed reviews. Yeah, I don't know. I mean, I personally, just the credit card rates are really insane. I know the debt that, I guess nationally it might be all-time high, outstanding credit card debt, and the rates are at an all-time high. But, inflation came down a little bit. Mm-hmm. So I guess there are some things that the Fed has done where some are speculating that we have achieved the soft landing. But yeah, then there's also some interesting jobs data too, where, there are still a lot of layoffs occurring.
Yep. Yeah, Hasbro today, right? Hasbro did a big one today.
Favorite
favorite
gaming company.
Pretty crappy for a toy company to lay people off 2 weeks before Christmas. I thought that was pretty terrible. right?
That is pretty insane.
Like you're I don't know.
Yeah,
That's
I don't
pretty
even know
crappy.
what
You couldn't have
they
waited
do
a month or
anymore.
so.
Like
But yeah,
maybe
Hasbro, I saw something like some EY partners are getting cut. So they're still happening. Yeah.
Spotify as well. There's a recent thing there.
Yep, that was the last week. That was a big one. Yeah.
OpenSea. Well, I guess that was probably a few months ago, but that was a big one.
That was a deep one too, right? What was it, like 50% of the company got let go on that one?
Yeah.
Yeah,
it's pretty massive.
That's pretty bad. Yeah. Yeah, it's been mixed. It's been mixed, like you said. I mean, it's clearly like overall the economy hasn't gone into a recession, but I work in tech, and I can tell you, tech definitely went into a recession. The salaries are down, job market's competitive, freshers aren't able to get jobs easily. So I mean, that's textbook recession. Finance I think has had the same struggles. So
yeah, I think remote companies are doing okay. I think like they're able to kind of hire globally and sort of ride the tides a little better. I mean, it depends on like what the business is doing overall, but
yep.
Yeah, I would say that to me it feels like Web3 is still kind of like holding strong as far as jobs, job openings are going.
Mm-hmm.
And yeah, just kind of like various tracking that I'm kind of noticing. I see like a pretty steady flow of openings flowing in. And yeah, there's this one of the newsletters I'm also observing. I guess this was like a LinkedIn Pulse article, so I'm not really sure where they get this data, but supposedly it's report of I don't know if you're able to open that link on your screen too, the Web3 data link.
Oh yeah,
but yeah, they're kind of describing, pretty like an average salary of a Web3 builder to be like 150K per year. So I mean, I guess it's hard to say. I mean, they're saying roles have been up almost 300% annually. So I mean, it's probably, it could be because that there was just such a massive deficit during the bear that everyone was just starving to death basically, and they just completely evaporated. But yeah, I guess with the next cycle, there's this resurgence.
Sure.
But yeah, I think it depends on like which sector of crypto you're in. So yeah, I guess overall kind of mixed reviews on how we're feeling. And then I would say regulatory, I guess we'll go into that a little later, maybe soon, unless there's anything else you want to cover. But yeah, I think that's something that I'm also concerned about having some impact here on just like how do we go out with a bang or do we go out with a fizzle? That's like kind of where I am, have like concerns and worries. Like, I mean, I think likely we're going to see more migration out of the US. So I think US data might not be the best representative sample of like crypto career data, I would say, going forward, because it's going to be probably spreading out more globally.
Yeah. With some of the stuff we've seen coming out of Elizabeth Warren and whatnot, probably going to be spreading to other places, which delves right into our next topic here, which is Elizabeth Warren and Jamie Dimon last week coming out swinging with some things about trying to restrict crypto with this new bill that they're doing.
Yeah. Should we play a clip? What do you think about that?
Yes, for the Bipartisan Digital Asset Anti-Money Laundering Act. So here is a clip of Elizabeth Warren meeting with banking professionals to discuss her new bill.
Hamas received millions of dollars through crypto transactions, including, quote, large sums from Iran. Mr. Dimon, you've been CEO of JP Morgan for almost 2 decades. Can you explain why crypto is such an attractive financial tool for terrorists, drug traffickers, and rogue nations?
I've always been deeply opposed to crypto, Bitcoin, etc. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance, and that is a use case because it is somewhat anonymous, not fully, and because you can move money instantaneously, and because it doesn't go through, as you mentioned, all these systems have built up over many years, know your customers, sanctions, OFAC, they can get bypass all of that. If I was the government, I'd close it down.
Okay, well, that's what we're going to talk about. Because last week, federal law enforcement asked Congress to update the banking laws, saying, quote, We cannot rely on statutory definitions that are decades old to address the illicit finance risks that we face in 2023. And these law enforcement officials specifically called out the use of crypto to finance terrorist attacks. Now, the laws clearly need to be updated, but crypto lobbyists are working overtime to block any legislation. They claim crypto is special and it shouldn't have to comply with the Bank Secrecy Act, even if that means letting terrorists and drug traffickers and ransomware criminals and rogue nations move billions of dollars totally unrestricted. So I'd like to go down the line here. Maybe I can start with you, Mr. Scharf. Do you think that crypto companies facilitating financial transactions should have to follow the same anti-money laundering rules that your bank has to follow?
Absolutely, Senator.
Okay, I like absolutely. Let's go on down the line. Mr. Moynihan?
Absolutely.
Okay.
Absolutely.
All right.
Positively. Certainly.
Unanimous, absolutely.
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 All right, it's the word of the day. You know, we've got to wait.
All right. Well,
that was brutal. That was brutal listening.
I mean, where do we even begin with this one? There's just so many ways to take this. You know,
this is like red meat. This is just like red meat for the crypto community.
Yeah.
Just like anything Elizabeth Warren says.
Yeah, the whole crypto is used for drugs and terrorists and everything. I mean, this is like such a tired argument. I mean, how many times have we heard this? It's not going to work, right? What they're trying to do here. This is what Napster and LimeWire and
Pirate Bay.
Pirate Bay. Yeah, what they did for media is what crypto is doing for money, and they could try to ban it, but I don't think it's going to work ultimately, because people are going to find ways around it, and other countries are going to still use it. And I mean, they're going to try, but I don't see them being successful.
Yeah, I think this is just like a clear example of the government trying to use they're trying to blow up this issue of money laundering and like tax evasion, trying to blow it up into this big scary monster and accuse the crypto industry of like all these crimes and over exaggerating the level of crimes. First point, it's very interesting that Jamie Dimon is just like, he just hates crypto so much, but at his bank, like they're building Onyx, which is is a private blockchain, but it is like a fork of Ethereum, and apparently they're settling at least like over $2 billion a day, and they have a team of probably around 300 now. That was from like a podcast one of them did a couple months ago, explaining their team and everything that they're working on. But I find that very interesting. So clearly, like, crypto isn't just for tax evasion and money laundering. If like they're operating a crypto protocol, so that's like pretty interesting, and they're using it to make settlement and money transfers much more efficient for their their network. And that's also very interesting that it's totally expected, like crypto is competing with banks so that people and everyday humans can like actually have control over the money or have like actual ownership of an asset. And I guess the banks really hate that. So they're just like in lockstep agreement with like Warren. And I wonder where she's getting all of her funding from. There's probably some backdoor stuff going on. She used to be like very anti-bank, and I feel like she's softened up and is like really cozy with them now. And that probably has something to do with her absolute just like hatred of crypto right now. Essentially what she's trying to do is force all sorts of crypto protocols to implement these AML rules, which would, I guess, require like every DApp that we use to like collect all of our information, essentially, like probably our ID, maybe our passport, just know exactly who we are and what we're doing with these platforms, which they currently don't even do for regular transactions, but it seems like they're kind of positioning themselves toward a CBDC situation where they're just going to try to move our economy over gradually into this walled garden where like all of our money is this digital realm that the government does have control over, because they currently don't have full control over it right now. There's also like a huge data privacy issue too. If they're like collecting all this information and sending it to FinCEN, like just everyone's transactions, like imagine if that got hacked, or like they didn't design the database correctly and then that just got exposed. That'd be just disastrous.
Yeah, I fully agree. I ultimately don't like, let's say this law does get passed, right? I just think the crypto protocols are just going to put up a wall and say no US people allowed, and they're just going to geofence the United States, and they're just going to call it a day. They're not going to spend time actually doing this, because it's going to mean the death of their protocol if they do something like this. No crypto person around the world is going to use an app that does this. So they're just going to block out the United States. And I think that's their intention with this, to be honest. I think the intention is to say, we're the good guys. We're the only people that you're allowed to use to get into to buy crypto is through the big banks. They're going to pull up the ladder.
Yeah, it's going to be pretty brutal. And yes, that's definitely something I'm concerned about. I would say there are going to be a lot of ways around these rules, but it will certainly be, they have a lot of tools at their disposal to make it more difficult.
I also think it's interesting to note here in this video that she mentioned Brian's political contributions from Coinbase. So that tells me that they don't like this newcomer to the billionaire elite class, right? She mentioned in the video, like, oh, there's a lot of donations being made, lobbying, they're trying to block this legislation, right? So she basically mentioned Brian trying to stop it. So that tells me that this large group of rich bankers have liked their situation for many years, and now there's this new guy that's come in and is, changing it, and they don't like that, right? They don't like change. They want things to stay where they are. And it's really kind of crappy that we're heading in this direction, because it's not what this country is supposed to be about. It's supposed to be about people changing their political, socioeconomic status. And that's what Brian did for himself. And now they're saying there's no more Coinbases that are going to be in the United States. This is the last one, right? And they're saying if you want to go start an exchange, you got to go to another country, basically. And they're pulling up the ladder, which I think is crappy. It's pretty doo-doo.
Yeah, it's terrible doo-doo business environment. Yeah, for crypto innovators right now in America. That's it's really unfortunate to see that happening.
Yeah, they don't like new rich. They want the old rich to stay in power, and they don't want new rich people. I also think it's interesting. I was thinking today, like, people gave Sam Bankman-Fried a lot of crap for politically donating, making all those political donations. But like, Brian's doing that too, right? It's just that Brian's running a legitimate business and wasn't commingling funds with a hedge fund. But that's the game that we have. That's the game that's played now. You get rich, and then you have to lobby Congress to keep you rich. Don't blame the business people. Blame our politicians, are the ones that are taking this money, and they're supposed to be fighting for us, not fighting for rich people. So I just point that as a dysfunction of our politics than the businesses.
Yeah, and then the hypocrisy is also just incredible. So there's 3 articles. It wasn't too long ago that it was exposed that all the big banks were facilitating a ton of like money laundering transactions for like cartels and terrorists, and they were supposedly knowingly doing it. I didn't read all the leaked documents, but I believe there are leaked documents from FinCEN directly implicating these banks facilitating. Well, yeah, I mean, JP Morgan, HSBC, Standard Chartered Bank, Deutsche Bank, BNY Mellon. FinCEN flagged more than $2 trillion in transactions that were suspicious, and files showed that even after they were prosecuted or fined for financial misconduct, they continued to move money for suspected criminals. And then there was a separate bank where authorities uncovered billions of dollars in wire transfers, travelers' checks, and cash shipments through Mexican exchanges into Wachovia accounts, which is now part of Wells Fargo, after it emerged that cocaine smugglers had bought a plane with the money they had laundered through Wells Fargo, previously Wachovia. And
yeah, it's basically hypocrisy. They don't mind at all that there's money laundering as long as they're making fees on it.
Yeah,
I think it's also noteworthy that Elizabeth Warren is a terrible legislator if you just look at her stats for passing bills. So I'm not too concerned, but it is worrying. It points to the system, especially now with the Bitcoin ETF and the Ethereum ETF, which is rumored, right? So Solana is pretty hot right now, and it's a big, especially after last week with the Jito airdrop. And I just thought it would be useful to our listeners, the one or two of them that are out there, to just go over the staking solutions that are on Solana right now, and what are the benefits and disadvantages of each one, and why should you even stake? And if you're getting into the Solana ecosystem or trying to farm points or whatever it is you're doing, just understanding the different products that are out there. So the first one is Marinade Finance. This is I would say, oldest project that's been around. And old, I mean, not even 3 years, just under 3 years. They were the first liquid staking protocol on Solana. They do two kinds of staking right now. They do native staking, and then they do liquid staking. So what is staking? What does that even mean? Essentially, you are depositing, you can think of it as depositing your native assets, your Solana, and this protocol is delegating it to a validator. So essentially, for the liquid staking, it's an algorithm that essentially determines where you're staked. And then for the native staking, it actually just splits it up among all the validators. I think there's over 200 validators, and they do that with your raw Solana. So they don't wrap it in a smart contract first. So that means essentially that you get higher APY. That's essentially what they're doing there.
Interesting. Okay, so native staking, you get higher APY, but you do not get back a liquid token when you stake. It's
for native staking,
just locked up, right?
Yeah. And actually, if you go in your wallet, your Phantom wallet, it'll show you, like, if you go into this, you go click your Solana and then you go into staking, it'll show like little bits and pieces of your Solana among all these validators.
Interesting. Okay.
Yeah. So I mean, it's an interesting product. If you want to do native staking and get the APY, and you don't really care about using other DeFi protocols or loaning it out or anything like that, you just want to stake and get high APY, you can use native staking. And they also have an incentive program right now where you are, I think it's Marinade Earn, or there's, where is it? I had it. Let's see if I can find it. Oh, here it is. So here we go. You have the two staking products, and you use Phantom, and it uses a bunch of other wallets too. But here's your liquid staking, you're getting 8.65, and then native staking, you're getting 9.06. So you're getting what, 0.4 percent more. But in addition to getting that APY, the additional APY, you're also you don't have smart contract risk. So for example, like a DPEG, if MSOL DPEGs from Native Sol, you could get wrecked with liquid staking if you have it, for example, like you're doing liquidity providing or you're loaning it out, you're taking leverage on it, that you could get liquidated. And that does happen to people. So by native staking, it's less risky too.
Yeah, no, that's very cool. Yeah. So kind of like, except Lido doesn't even really offer, I guess you can't really native stake Lido, but yeah, no, this is interesting. Yeah, I should check this one out.
Yeah, it's a pretty good protocol. And I love the marketing too, like the whole kitchen thing. The whole, like, the branding is really good. So, I mean, I like seeing that in products. And they have this earn. You can stake, the native staking, and you actually earn Marinade. And that's going on until the end of the month. So if you want to play with this and do native staking, you actually get some rewards in Marinade. So they juice up their APY with that too. So you can see here the staking, just native staking 7%, but then the Marinade APY is another 2%.
Oh, okay. Interesting.
Yeah. And they might do more seasons. It just said season 1. So I'm assuming that there's going to be more of them. And they actually have like this cookbook concept. I don't know if maybe it's here or maybe like where like they tell you different places to put it, the MSOL. So they have this cookbook and then it shows you like, oh, you could put it in these protocols and borrow against it. You could lend it. Options trading. Yeah, I mean, you can get as degenerate as you want to get with this, with the MSOL. But again, you're taking that risk that it doesn't depeg and, you know, you get liquidated because of a smart contract or just someone trying to wreck the market for profit, which has happened in the past.
What would you say is Solana, the kind of, would you say that's like the Aave of Solana?
Yeah, I would say Solana is, yeah, they've been there first. They're the Aave, but they're not doing an airdrop. So if you want to farm airdrops, you would have to go to MarginFi, but that's not up here. Leverage staking is only Solana. So I guess maybe, or NFTFi too. But yeah, there's lending on Solana. You can also go to MarginFi and lend out Marinate Sol and also collect MarginFi points as well.
Yeah.
So yeah, it's a pretty interesting token. Let's see the price action on this guy. It's about 350 million fully diluted. And full disclosure, this is a risky asset class. Please do your own research. We may or may not hold some of the assets that we talk about in the show. And here's, you know, just the general price. It's spiked recently. This past few months have been quite nice for Marinade.
They seem relatively new, I guess, or they've been around for a while, but didn't have a token, I guess, until recently.
Right. I think the token generation was fall 2021, so 2 years. They've been out for 2 years.
Okay.
So, you know, they're the oldest one around. They're a pretty interesting project. So some cons here, the treasury does hold a lot of the tokens. So if you go into like just the circulating supply versus fully diluted supply, it's, you know, you're at about 25% or circulating. So, you know, treasury has a lot of tokens. So I guess you're just fighting against, you know, people that work for the protocol dumping on you.
TVL is pretty good. I'm wondering how that stacks up right now with everything.
Yeah, so the interesting thing to note is the TVL is actually higher than the value of the token by 2x. So, I mean, I don't know if that matters with fundamental analysis. Ultimately, it depends on how much fees they can capture from the TVL. You know, if they can capture a lot of fees from this, then this could be a very profitable token. But yeah, that's Marinade. And I want to talk about Jito next. So Jito has gotten a lot of buzz lately because it's been they did a huge airdrop last week, and even if you staked a little bit, you got a pretty thick airdrop. So there's a lot of attention on Jito, and they injected a lot of liquidity into the Solana system because of that. They're touting a 6.9% APY right now, and this is an interesting one because it's not just staking. They have the liquid staking token Jito Sol, but then they're also doing MEV extraction essentially. So they have this concept of like there's a couple ways you can earn Jito. You could stake, you could have a validator, and you could also do MEV searching. So you actually can earn by doing MEV searching and bundling transactions yourself. So by preventing MEV, you're actually getting some rewards. So they also have a validator client as well. So they develop their own clients. You can run a Solana node using Jito. So it's pretty interesting. It's got more to it. It's kind of like a Flashbots combined with Lido.
Yeah.
Yeah. So I mean, it's a newer token, and again, this airdrop just started, so you know there's a lot of attention again, but its valuation is quite high right now, and it's kind of hard to justify. Like the valuation is $3 billion, so it's actually worth more than Lido right now. And I don't have TVL stats, but yeah, TVL is 6.3 million Solana, which comes out to, let's see, 6.3 million Solana, which Solana's what? Let's just call it 70,000 right now, or $70. I wish. Let me see, 63 times 70, 1 million. Yeah, so 441 million fully or TVL against a $3 billion valuation. I think this is coming down quite a bit. So I mean, I could be totally wrong. See you at $10 next time we do an episode. But it's kind of hard to justify this valuation.
It's that's very interesting. So they basically have their own validator client that I guess is plugged into a Jito builder, and then that client has a higher yield than the traditional Solana validator client, or
yeah, a little bit. So if you just like want to stake it on your own.
Yeah, because I know on Ethereum what happened there with the behavior of like people running MEV Boost. I think it became something like 90% or more Ethereum validators are actually running MEV Boost because there's just no rational reason to not use it, just with the way that Ethereum's consensus operates. So I do wonder if there's like a similar mechanism on Solana where it's just as efficient to be running MEV. And then, I'm curious what the dynamics are there if everyone's just going to be running these Jito clients or a Jito builder enabled clients. Looking at that more.
Yep. Yeah. I some of the risks of this are it's a newer protocol. The MEV business model hasn't really been proven out quite yet, so it could take a while. And some of the airdrop, people having big airdrops, and they're giving people a year and a half to claim all the airdrops. So you could get some volatility because of that. People might sell, so just be a little careful. But very very interesting protocol. And then lastly, we have Blaze. So Blaze is lesser known. I don't hear this mentioned as much. Oh, I looked at the Blaze pizza again, like you did last week. Blaze steak. Yeah. So this one is a little it's interesting. They make some claims here that I don't know how to verify any of this, but they claim to have the largest validator set of any Solana stake pool, and they're using the official stake pool smart contracts from Solana Labs versus I guess Marinade and Jito, which are using third-party smart contracts that they developed. So I don't know how that's better, but I guess it's more heavily audited. That's the thing. They're saying it's more heavily audited. So maybe it's safer. There's less smart contract risk is what they're claiming. And the thing that is it's the same concept. Essentially, it's a liquid staking BSOL, and it's not as available on as many platforms as Jito and Marinade are, just because it hasn't been around as long. But it's as far as valuation is, it's pretty low. 26 million.
TVL, it says 103 million TVL and then 26 million fully diluted. Let's see. So it looks like a 4x TVL over FDV, which is
that's not bad.
Definitely interesting, but I am curious where their audits are and if we know anything about how vetted this has been.
Right.
And how long has this been around for, I guess? Do we know?
Oh, not that long. Let me see. I think it came out
July?
August. So it's been summertime. So probably, I would guess, the same time as Jito. But they don't, they just have the liquid staking. And the fees are just from, you see here, that there's no deposit fee. But then you could pay a fee on instant withdrawal. So if you want to get it out instantly, you pay a fee of 0.3%. And then if you have to delay withdrawal, that's a day or two. I think it's 2 days. You pay 0.1%. And then there's an epic fee for, as you have it staked. The AP, they take a little bit of the APY and put it in the treasury. So I guess
so essentially the 5% is kind of like their commission almost. So it's that's just the overall commission.
Yeah.
Every reward earned.
Yeah, and they, then they break it down the epic fee where it goes. So liquidity, treasury, they burn 20% of it. So I guess it's restricting the supply of the token. So I mean, it's the same business model as the others. The more TVL they have, the more extraction of fees they can do. But I just don't exactly know where the competitive advantage is with why wouldn't you just use Marinade? That's all. So like, yeah, I guess you're paying for the risk with the low market cap.
Yeah, I'd say as kind of like a speculative investment, it seems like this is kind of in that realm of like I mean, it seems like according to DeFi Llama that the contract maybe has been out since May of 2023, and it was hovering around like the 500,000 TVL range, and I guess it's shot up in the last couple months.
Yeah, again, like this recent run where like everything's gone up, and I guess the GWAI drop really pumped it too. But yeah, it's done quite well. But if this, I mean, 25 million FTV, if this thing does take off, this is still pretty low market cap to get in. So that's BLZE.
Yeah, I'm curious to read more into this. I do feel like the liquid staking, if ETH is any indicator, the first mover's advantage is really like a big piece of the story. And like Lido, I think they kind of moved fast. They launched really early, and now there's like a big centralization problem. And maybe they launched when they weren't fully ready to launch, but they went really hard on marketing and have just absolutely blown up and taken massive share of everything. And you have like a couple other solutions like Rocket Pool. So maybe this is kind of like a Rocket Pool equivalent. Still a lot smaller and maybe not fully proven out yet, but could be something to follow and look into more and read into those audits, see if they're actually audited.
Those are the main three. I would also point out with Blaze, we're not sure what the circulating supply is, at least from CoinGecko. So that's another risk too. I don't know what 25 million is fully diluted, but I don't know what the actual market cap is. So
they're saying according to SolScan, market cap is 10 million.
Oh,
saying current supply is
it's actually not that
bad. Around 10 billion tokens. Just under 10 billion.
Okay. Alrighty. So you want to move on to our picks of the week? I can go first here with my pick. So my pick is going to be GMBL tokens. So GM, a friend of mine sent me this. So this is part of the gambling narrative. So, we've all seen Rollbit this year. Rollbit's just taken off and really just grabbed that narrative. It's gone up exponentially. So gambling seems to be a narrative that's shaping up with crypto. And this token's essentially...
What's Rollbit?
Rollbit it's like a platform to gamble on, essentially.
Okay.
Yeah, I mean, it's 500 million now, and it started the year at, like, look at this. This time last year, it was 12 December, it was at 2 cents. No, a fifth of 1 cent, 0.002. And now we're at 16 cents.
Oh,
so, yeah, I mean, if you got into this time last year, just sat on it, you could own a casino now. Let's just put it that way. GMBL is, like, their whole shtick is we want you to share in the house profits, in the house, like what the house makes on the bets. So they have these 6 games: Crash, Plinko, Mines, Blackjack, Hilo, and Roulette. And it's on Arbitrum as well. And when you get the GMBL token, you could stake it. And currently you're sitting at 47% APY, which is quite high. And essentially the fees that the protocol generates is put into the staking. So that's where this comes from. So yeah, 13,000 house profit distributed in the week, 256,000 total house profit. So that's essentially the point of it. Is you gamble, you win, and the house takes its share and distributes it to other token holders who are staking.
I'm assuming that's all in just X gamble, or is this okay? So you stake gamble.
Whoops.
So there's no stablecoin involved here. It's just all
no stablecoin. Yeah, just a native token. And then you play these little games and you claim the rewards, etc. So it seems interesting, but it's very new. I mean, it doesn't have as big of a moat as say Rollbit does. And they seem to be operating on somewhat of a shoestring budget. I mean, they did a fair launch. I think they raised like 700,000. So they have a couple million to play with in the treasury. So I guess you could see that as a good thing, depending on who you are. So it's got a low market cap. It was audited by Halborn, and it was, again, fair launch. Let's see. Yeah, so 5 million gamble was sold on a pre-sale at a 5 million market cap. The pre-sale raised 750,000 USDC. So I mean, we're not talking big numbers here. It wasn't like hugely backed by VCs or anything, which I think is pretty good. I think I see that as a good thing. The fair launch tokens that I've seen so far this cycle have pumped really well. So, I think it's a positive. But some of the bad things are you have high staking inflation, so that's going to ultimately impact the price as it goes up. People are going to sell into that, and you're up against a lot of inflation ultimately. But there is a total supply. So I guess that's capped. Then eventually the staking will go down over time, and hopefully that'll be abated. The roadmap is a bit thin. So like they have this roadmap here. They raised 2 million. They launched it, but then like you look at like phase 2, it's like, all right, build, fix, test, ship, and then live casino slots. But there's no like, there's no like detailed plan here. Yeah, phase 3, expand. Like someone did this in like 5 minutes. Expand. Yeah, not much of a roadmap, so that's a little bit risky. I don't think they have much of a plan here. And so they're on a low budget, not much of a roadmap, and you're in a lot of inflation.
And you said this is on Arbitrum?
It's on Arbitrum. Okay. And you could buy the token Camelot. You got to get it on Camelot, which is like their big DEX.
It's pretty low, but yeah.
Yeah, it's a low volume. So the spread is pretty,
it's going to be slippery. It's going to be slippery on that trade.
Don't trade with size on this. Don't put your life savings in, guys. What's yours, Dan?
Yeah, I think I saw someone in the chat mention Helium, and I haven't really heard much about Helium in a while. But yeah, I don't know if you wanted to pull up maybe that tweet and then can look at like the chart a little bit. But Helium Network Token, HNT, has been tied to the Helium Network, which has been around a pretty long time, actually. I'd say at least a few years. And it's basically started out as like this IoT network where you buy these hotspots and earn HNT tokens. They didn't even have like a blockchain, to my knowledge. They just had like a basic kind of very low powered consensus where these little hotspot miners, you plug them in, connect them to your IoT devices near you, like scooters or GPS tracking devices, like ride sharing devices could connect into the network. So they had some partnerships there. They had like an interesting flywheel tokenomic model where there's like burning and it's like the transaction fees are fixed I think like some US dollar price. They had like oracles, and you had to pay for your usage, and the hotspots would like earn these tokens. And there was like a huge like year-long back order of buying these like miners, like the Bobcat miner and all that. And I remember a lot of normies were getting into crypto through Helium. So a lot of people, their marketing was like incredible. They penetrated into a lot of the mainstream markets. And then they added validator consensus with like actual like professional node operators. And I was looking at them and doing some research on like what requirements they were having just to do that. But then the network kind of just crashed. I think it was just very overvalued, and the token went down a ton. And I think
HNT token. Yeah, this is it.
Yeah,
it's high even now, really.
Yeah, I mean, now it's definitely had like a big run up recently, but yeah, I mean, it really just got battered. And but now it looks like they're kind of around when they crashed. I think they began their pivot into wireless, so Wi-Fi, and I think they were calling it like Freedom Fi. Or wait, no, is that Google's? No, I think Freedom Fi was what they called it.
Okay.
Google Fi.
Google Fi is Google. I have Google Fi.
Yeah, I do too. Yeah, anyways,
on Solana too, right? Helium's on Solana.
Yeah. So they had their own blockchain at first, and then they pivoted and they actually moved to Solana. So I think that's very interesting. Yeah, so they're kind of moving more towards like not just plugging your miner into your outlet, like in your apartment, but like if you have access to a roof, connecting like a different type of miner to something, on your roof, and trying to promote this decentralized Wi-Fi network. So yeah, I saw that the tweet. If it's accurate, 10,000 subscriptions right now at $20 a month. That's like $200K a month in revenue.
All right.
And they seem to have a lot of providers that are building these miners. Like they don't just have, like, I don't think they build them in house. They have these suppliers that are building the miners. So I think they're kind of building an interesting, they're paving the way, I think, for like an actual crypto use case here to allow people to use, basically move away from these extremely brutal network provider middlemen that are just so expensive. And I think this is like a really interesting opportunity potentially. I mean, we'll see if they can execute, but yeah, recently piqued my interest again.
Nice. Yeah, I remember people were mining this last cycle, and they bought the miners, and they had to wait like 6 months to get it, and by the time they got it, the market crashed. And
that was me.
A lot of people.
That was literally me. I got it a little too late.
Yeah, I'd love to see that they're still around, and of course they're on Solana, which I love too. I do think that they're going to have to wade through a little bit of the PTSD that the market has with the miners. I think that there's going to be a lot of work to do there, but I think they have potential for sure, especially this $20 plan. If this is real, it's very competitive. Like, I know people with Verizon. I moved from Verizon to GoogleFi, and that was a big switch for me. I'm very happy with it. So if they could do all that with $20, that'd be great.
Yeah. I think it'll take a very long time to maybe get to the effectiveness of like these other providers, but if they can market it well and get everyone on board, I think it's like, it will probably be unstoppable. We'll see.
Yep. Yeah, I mean, this is like one of the things about Solana that I love is this is something that's only possible on Solana, really. I don't think that you could do something like this on Ethereum with all the fees and whatnot and the speed of it. I don't know what is actually being transacted on the blockchain that they need Solana. That's something that like I have to look into.
I think it's like proof of coverage, something along those lines. But I forget exactly what it was. But they definitely have to like attest that they are like.
Oh, cool! They have this little map thing
connecting. Yeah, the map's pretty interesting. Like it's quite a lot of miners out there.
Wow. Yeah, So North America, they got Europe is Germany loves this thing, man. Germany. Wait, is this Germany? Yeah. Germany.
Yeah, I think so.
UK loves it. That's cool.
Pretty interesting.
I think this is great. I mean, when you think about like if this comes with the Solana phone too, if that takes off.
Oh yeah. We should do like a whole episode on Solana phone. Maybe like when we build out a bit more. I would love to get someone working on that team. Like, would love to chat with them.
I'm not gonna lie. The Solana phone. I need a new phone soon. Within the next year, I'm gonna get a new one just because I have the Pixel 4 and it's been struggling lately with the new software on it. But like the new Google Pixels, they took off the fingerprint scanner on the back, so you can't unlock it. And that's like my favorite part of the phone is just being able to use this to unlock it. And now they took that away. So, but the Solana phone still has it. So I'm like, I use a lot of Solana. Am I willing to take a risk?
I was very upset when they got rid of the fingerprint.
Maybe I'll get it as like a secondary phone first, just to make sure it works good, and then I'll move all my stuff to it. But I don't know, man. If they keep improving it, I might get it. We'll see.
Yeah, I mean, imagine if they just like. I am curious if they're going to have like their own light client or something on the phone. And like, imagine you just turn on the phone and it's just its own client, and like you don't even need to like fiddle around with like nodes and like an Afura or anything like that. You just like have your own built-in, phone that's connected.
I don't really use crypto on my phone at all right now. All my crypto is I do it on my laptop, and I think the phone's very risky. I don't even try to. Like, I got to use my ledger too, so I don't even know how that would. I know it would be like over Bluetooth, and then like I do, but like Bluetooth is very insecure protocol, I think, and I'm just I'm a little afraid of that. But with the Solana phone, I might be able to actually interact with crypto on my phone, which would be like a new way to access crypto for me.
Yeah, I think it would be a massive boost in privacy and security for people. Like, I think it would be, I guess there's a lot that we don't realize about our phones, and like how much of our phones are just like completely exposed to the world, and like how insecure they are, and how not optimized they are for crypto. Like they just are totally not really built for it right now. Just everything like all that you can really do right now with crypto on your phone is like just go to Coinbase and buy. But that is just like 1% of what crypto is about. So if you can build a phone that's really plugged in, I think Solana is going to have like a real edge there.
For sure. Yep. Alrighty. So we get to close this out. And what you got any closing thoughts?
The main thing that has been kind of on my mind the last like couple of weeks is like fear of FOMO. Like there's so much kind of hype that I feel like is building up, almost like it was back like summer of 2020. Felt like the ground was kind of like just rattling every day with like news and everyone, like these tokens just exploding. And I would say I'm just trying to do my best to maintain a level head about it all and not really like ape into leverage yet. And I'm just trying to like take it slowly and not really give in too much to the hype cycle. I am like trying to use this time though to refamiliarize myself with my different wallets and like interact with these protocols in a way that I haven't done in a little bit. I used to do it every day for hours a day, and then I took a break. But I am kind of thinking basically just, trying to maintain a level head, and I hope our listeners do too.
Yeah. I think leverage especially, it wrecks people. If you're going to use leverage, don't use too much, just stick with a low amount, like a lot of people, they take 10x leverage and then the smallest movement in price liquidates them. And it's just like, you get rich quick, but you get poor quick too. That's how it works. The volatility of crypto, it can move against you very quickly and more than you expect. And it's just in a very emotional market in general. People are very emotional here. But it's a good message to leave people with.
What about you? Any other thoughts from your end? Have you lit any candles that were red lately?
No, I haven't. Maybe, it's Christmas time. So maybe, I'll get a red candle and light it and burn it down and give a good toast to the bear market that seems to have reached the end here. We're at the death of the bear market and, usher in a green 2024.
So. Hell yeah. All right. Well, hope everyone has a wonderful day, and we will catch you in the next one.
See you next time.
Signing out.